I'd love to find out, what what your impression of where we sit right now in terms of market
Mhm.
cycles,
Yeah,
and how people who are rental property owners and buyers, how they should be preparing for what's ahead. Like, what's your prediction
sure.
on where we're going?
Yeah, so just realize anytime you ask somebody a question like that, you have to know their track record. So my track record is 20 years, Fresno, California, right? So I'm going to give you the answer for Fresno. I do think it relates to most of the country. It will not relate to the big cities, New York, San Francisco, LA, Seattle, Chicago, right? The big vertical cities, my answer for you quite simply is you're in trouble. If you're in a high tax state in a vertical city uh, where there's protest and social unrest, urban flight is real and you are about to see rent destruction and value destruction. But that's not most of the country. That's 10%, 8%. So most of the country is like Fresno, and I think it goes up from here. Why do I say that? It's very simple. What is going on today? And today is different than January. Let's be clear. And my opinion of January was different than June of last year. But today, clean properties that can pass FHA lending and inspections are impossible for investors to buy because clean properties in the suburbs are going to get outbid by homeowners. And again, I have real examples. There was a house that was listed now seemingly 45 days ago for 199 right in my backyard. I could pay 170 for that as a rental and make my 6.5% return. It's clean, so it means it's going to go FHA. I'm willing to pay 170. It's listed at 199. It closes 48 hours later for 219.
Wow.
It's because an owner occupant can come in with 3.5% down, get a 2.9, 2.8% 30-year fixed loan, and pay less monthly payment than I would as an investor. So that's what's happening today. So what does that mean for me? That means I can't look at turnkey properties today, especially if they're vacant. I have to look for problems today that won't qualify FHA. So that's tenant occupied homes, because those won't qualify FHA, frustrated landlord wants to sell, or a total junker that won't pass inspection. You have to, as an investor, you make your money when you buy. I didn't understand that at the beginning, but it's true. My biggest opportunity and why I look every day is I want to know, I look like buying rentals is fishing in a lake. And right now, the lake is full of owner occupants and everybody has a line in the water. And oh, by the way, there's just not that much for sale. I don't want to be in that lake. I want to go to a lake that has certainly less fish, but a hell of a lot less lines in the water. And I've been doing that for 20 years and it changes. That's the beauty of real estate investing is in January, you could buy a clean property, right? Before this whole shelter in place and space is good and all of that. But it changed like that, like changed in March. And you just have to watch. And I won't get in bidding wars. I've backed out of deals over as little as $5,000. I know my numbers. I know my return that I want. It's all about cash on cash. And the other thing that I think is crazy out there is people in real estate investing, they follow trends and they think trends always work. And the biggest trend I see today is bigger is better. Grant Cardone, bigger is better. Yes, that was true from like 2012 to 18, 19. I would tell you today to run the numbers. And given cap rate compression today and the fact that C-class properties live close together are the hardest things to manage, and those tenants often work in retail and restaurants. It's a hard sledding today. So my numbers say that houses are a better investment today. And will that always be the case? Of course not. But it's the case September 11th of 2020.